everybody. I'm Peter Grant with Zaner Metals. Welcome to This Week in Metals. Welcome, my friend who apparently has left Chicago and gone to the
Eh,
beach.
Can you blame me?
No,
It is crazy there. I like it here. My chair is sinking in the sand. You might lose me about halfway through, but it's okay.
you're taking social distancing to the extreme.
Oh, absolutely. I'll be in the water as I'm probably with my laptop in a minute. So
Right on.
let's get this baby rolling. All
Let's get
right.
it rolling so you can get back to your beach stuff. Um, Kind of a pretty interesting week in metals. Uh, we
Active.
had uh, gold ultimately ended up down about just a little bit under 1% for the week. What's important, I think, is that the low end of the range held. It sort of obviously started out the week with more positive vaccine
Yes.
news, and gold sold off much like it
Sold
did the
off. Yeah.
previous Monday, although not nearly to the same magnitude.
Well,
So I think it's encouraging that now we have two very uh, viable vaccines
it is.
that are
It's terrific.
getting pretty close, and the market seems to have latched on to some optimism surrounding that.
No,
Um,
fast track was a brilliant idea, and the problem, I mean the real problem, we have two things that we really need to let our viewers know about in gold, and that is heads up on the ETFs. I mean, we have been almost 9 months into positive flow in, and we are 6 days of heavy selling, and I mean every day they're coming out of the box selling platinum, palladium, silver, gold. They have not stopped, and I'm just wondering if people are just taking profits, getting a little nervous about this failure of the stock market, take out 30,000. Just an antsy feeling all around, and plus, first time in really a long time that I can recall. I don't know about you people. We've seen central banks selling, and that's a highly negative thing, and that I think we can when we can point right at COVID and say, hey, there's a lot of people running out of money, and a lot of people are realizing positive cash flow coming in and getting rid of some of their gold. So I would say the central banks isn't as alarming as the ETFs. I kind of wonder about that. And in the meantime, we get this real positive report from the World Gold Council, who we follow well, and we've known a number of people on their panel. And the thing is that they said that sustainable development goals, which is another an acronym SDG, been pushing for about 7 to 10 years, and we've supported it as well. And that is to make things around gold better. And we don't buy gold from countries that we can't verify they don't have child labor, for example. That's one of the things that we've always done at Zaner, and we will continue to do so. There's a number of things that we do, but what they're saying is that it's paying off big dividends. We're seeing economic development around gold mines is dramatically increasing in the way of building hospitals, schools, things of that nature. The other thing they purported, which was that the income per capita of people around mining areas, and I mean gold, silver, platinum, palladium, has gone up dramatically. So we've gotten some very positive news about our efforts to stem the tide of negativity in the gold mine. People just chopping down trees. I mean, all the bad stuff you see on the news, that are happening, and the positive things that are starting to come back.
yeah, good stuff, and
Yeah,
I think that bodes well
yeah, I do too.
for gold overall.
Well, it's
um,
good for people that are buying jewelry and whatnot to know that the stuff that they're buying is making other people's lives good too.
right, right.
Yeah.
So again, my sense here is that action in the gold market is very much centered on sort of this mindset that while we're not at the end of the COVID pandemic, we're
Okay.
perhaps to quote Winston Churchill, perhaps approaching the beginning of the end. And
One of my
that's
favorite guys.
yeah, right.
Yeah,
And so I think that we're unquestionably seeing some investment outflows from the ETFs,
right.
as you mentioned, 6 consecutive days
Yeah.
of outflows, and Friday was kind of a positive day, so we may have still
Wasn't
seen
bad. It was
outflows.
light, but it wasn't bad. We saw a little retracement to the upside. I agree with you. I mean, that was kind of surprising because I was thinking, maybe we'll see 7 in a row, big heavy selling, but we didn't see it. So I agree with you there. I think that was a
Yeah,
good sign.
yeah, and so again, we'll see how it plays out. Again, I'm pleased that the bottom of the range held in gold.
Right.
We held above the 100-day moving average and so
Which
forth.
is beautiful. Yeah. And
So,
that's been such a strong indicator for us.
but I wouldn't say gold is out of the woods. I'm gonna say it again because I've been saying it for weeks. A
Uh-oh.
sustained move back above $1,900 is what I kind of need
Okay.
to
And
feel
what
a little
I
bit
what
more
I'm going to
positive.
say is the drum that we've been beating for years, which is if we do get a good break, let's look at it as an opportunity to put a little gold in the vault. Okay, guys?
So you make a good point, and as a floor trader, you probably know that the market tends to want to run stops. So the the really obvious place to have the stops are below that
100-day moving average.
well, that and the low end of the range. And if
Sure.
you get that close within a couple bucks of the low end of the range, it's awful tempting, you
To
know.
go palms out? Yeah, but you
Yeah,
got to remember it's computers, not human beings anymore.
the
So,
computers know where the stops are too, my friend.
oh my good IA, huh? All right.
Yeah,
All
yeah.
right.
So just
All right,
be
so let's
aware.
go with that. Let's just say that, hey, there's the potential here for a break. We're diddling around some very critical numbers here. If we do take them out, look at the fall. Let's examine it, and let's look at it as an opportunity to load up on some of the stuff that we didn't buy before it rallied.
Right. So
Okay, what about silver? Talk to me, man.
so silver ended up last week down just a shade over 2%. It was the second consecutive lower weekly close.
Right.
Um, Still nowhere near kind of that corresponding range low, which is 2164 in silver. So it's while it was down bigger on a percentage basis than gold last week, it's nowhere near the range low. And I find encouragement in that, and I think part of the reason is that if you are if you have sort of latched onto this COVID vaccine optimism and expectations that the recovery is going to continue.
Right.
Uh, Industrial metals in general that derive the majority of their demand from industry
Yes.
are going to fare pretty well, and I think
if
that that's
if
what's
we have a
underpinning
new
silver.
administration, what you're saying is the push into green will, for example, solar cells which use a colloidal silver suspension for the spray for the layers to get their voltaic acid, will indeed be in demand. And you're 100% right. I think silver, if everything breaks, silver will break slower. And it will be nothing but a buying opportunity in my mind, too, because if we go green, they have no other choice but to go with silver.
Right. Yeah,
Yep.
that's typically what you wouldn't expect that, because typically when the market breaks because of the higher beta in silver,
Right.
the ride down can be much more hair raising. But
Whew.
um,
Yeah. I mean,
the
yeah, but the vol is hands down much higher, as as Pete's saying, was the beta from his technician side, and it is. Typically you see much more violent moves in silver. Look at them as opportunities. Hey, you know what? They break the silver a buck
yeah,
or two. It might not be a bad place to get
you're
in.
right. I like the underlying fundamentals, particularly if
Yeah.
you believe in recovery,
Right.
economic recovery, but
Yep.
not just in the United States, but globally. If
Globally.
you believe in, green initiatives are going to continue to benefit, um, and there's rumblings of renewed stimulus talks as
Yep.
well.
We saw
So
that today.
that's all
Sure.
encouraging. Um, it's worth mentioning that Treasury Secretary Mnuchin sort of suggested to the Fed this past week that they start scaling back accommodations at year end. The market didn't like that initially, but it quickly rebounded from it.
Yeah, I
I think
think the idea of your, remember you've been keeping your chart as to how much money they're pumping into the furnace, if you will. And
yeah.
I kind of like the idea that he did that, quite frankly.
I will tell you that I fully believe that as focus shifts away from COVID, again, thinking optimistically here, if the
Okay.
vaccines come out early in the new year, or perhaps even start getting distributed, in December, and COVID starts winding down, the market's focus is going to shift right back to where it was pre-COVID. And I think that the biggest concern, and COVID contributed to it even more, as you alluded to, the massive, absolutely massive amount of debt that we have accumulated.
Thank you.
So
No question about it.
yeah,
No
so
question
while
about it.
there might be some initial pressure on on gold from safe haven buyers.
And base metals too, they'll feel some pressure too. And you know what? I mean, as far as I'm concerned, aluminum, iron, things of that nature, it's all a buy. And manganese. And oh, by the way, we've got an announcement to make. New contract on the CME, Cobalt
Oh yeah,
coming
cobalt. That's
out
right.
December 14th, guys. We have been very friendly to Cobalt over the years. Any of you, I just recently, Sunday evening, talked to a miner of Cobalt up in Canada. We will be happy to sit down with you and work out a hedging program. That's what we do. It is a new contract. It's going to be thin. Let's let it develop a little bit. I do have some friends at the Merc. We can figure out what exactly the parameters are going to be. They'll be published shortly, and it's a new contract for metal. So
Yeah,
hooray for the Merc!
ready for the Merc.
Yeah.
Let's move on to the PGMs. The highlight of the week had to be platinum, right?
Oh,
Up almost
beautiful week.
6% on the week,
Yep.
set a 9-week high. And you remember that we remained friendly platinum, but we were a little bit concerned about its inability to sustain gains above $900.
Absolutely.
It has now sustained gains and closed above not well above $900. Traded as high as 964.44 this week.
Yeah,
Um,
and it just did exactly what we thought it was going to do. And while I got a second here, Pete, let's give a shout out to our friend Matt Watson. Did a special on platinum for Kitco. He has given us permission to post it on our show. It was very nice of you, Matt. Thank you. I sat down and chatted with him on hydrogen conversion with platinum. We swapped some LinkedIn stuff as well. Terrific guy, terrific show. We've been pumping out the future of platinum is hydrogen. We really believe it the same way. And I think if you get a chance, Pete's going to put it on the end of our show. Please hit that link. It's very informative, and it will definitely reiterate what we've been trying to show you as far as consumption goes of platinum, and the fact that we're going to run out of platinum real soon.
yeah, it was a very insightful interview with
Yeah,
Kitco. It lasted about 15 minutes or so.
yeah, it's
He
not
covered a
long.
lot of ground besides platinum, the palladium, rhodium,
Right.
cobalt.
Arrhythmium.
Yeah.
Yep.
So
Yeah.
it's worth your time to
Yeah. Take
watch
a
that
peek, guys.
after you're done
Look,
watching
we're
this.
we're here to give you as much information as we can to make your business profitable. So stick with us.
Right, right. By comparison, Palladium was kind of sideways all week,
Yeah.
just sort of trading at the low end of that bull channel that we've been talking about. I mean, probe below it again a couple of times, but closed back
It's still
within
not a
it.
bad number. I mean, if you're a scrapper, you're crushing cats, autocats, and you're smelting. You're making money. So right now, the numbers aren't bad.
Right. I think some of this may have to do a couple of things factored in. Um, uh, the, the heightened expectation of substitution. We've been talking a long time about
That's
the
very
price
pragmatic of you.
differential
Yeah.
between platinum and palladium. That platinum
Right.
was undervalued in our,
Oh
our
yeah.
our opinion, both from an investment perspective and for use in AutoCADs.
Yep.
You know, the we sort of thought that the moving goalpost of emissions standards had prevented people from transitioning to platinum from palladium and AutoCADs, um, eh, but that perhaps is changing, and also as you've mentioned in recent videos, that platinum was pretty attractive on a straight investment play as
Sure.
well.
Sure.
And we talked about the gold platinum differential as
And
well.
and if you recall that the projection is anywhere from 3 to 6 months for retooling and recycling to switch from platinum to palladium. It's not a cheap thing to do, but once you get it done, when you're talking 50% or more reduction in net cost, it can pan out over a year.
Yeah,
So it is tempting. What you're
yeah.
saying makes a great deal of sense.
Yeah, we'll continue to watch these markets, but it
Yeah,
seems like that mindset is gaining some traction
I agree.
in the market. Um, Copper had a
We
great
got
week
to
as
mention the
well,
doctor.
and most of the gains came on Friday last week, but it was up 3.4% for the week.
Yep.
2.3% of that came on Friday. It was the third consecutive higher weekly close. We're on track for we continue to talk about
Two.
330, but I'll point out that
Yeah,
Goldman Sachs came out with their commodity forecast,
they did.
and they're looking at they like 375 in
Yeah,
copper.
Goldman was became bullish about a week ago. Two things that we really need to put into the mix. One is that China released its consumption number. Remember, any number out of China you take with a grain of salt, but they were up about 5.5% year on year as far as consumption goes, which punches them through the 900,000 a ton number for monthly usage. That's a big number. So
Yeah,
I was really surprised to see that. So let's keep an eye on China. Let's see if those numbers keep going up. Also, in the future, guys, we have the potential for doing a technical special with a special guest working with Pete Grant. Pete, if you could mention that for our viewers in the future, it would be great.
yeah. We're trying to get that. Trying to work out the logistics. You
Yeah,
know, he's having his people call my people, and my people are calling his people, and
we're gonna
like,
do lunch.
yeah,
Meet me on the beach. We'll do lunch, but
yeah,
we're gonna try to put together two great technicians to go over the potential for for copper in the future, and hopefully it will give you guys some indication as to how the charts look and what the potential is in the future.
yeah. And something you said made me think that I did want to mention some of the Silver Institute stuff. Um,
Oh yeah,
that
sure.
came out this week. So if we can
Yeah.
backtrack to silver a little bit,
Oh, absolutely. Silver
um,
Institute's the best, no question.
yeah. So their um, quarterly review came out this week, and there are some good numbers in there. Most of the good numbers come on the investment side for silver. Silver physical investment is expected to be up 27%
Wow, really?
to 236.8 million ounces in 2020, and that would be a 5-year high.
Yeah.
US bar and coin demand
Yeah.
up
What is the coin coming?
62% in
Oh boy, Jimmy,
2020.
boy, that means Mr. Ryder at the mint is just gonna. I mean, he's
He's going to be
he's
a
doing the
busy
best
cat.
he can. He's gonna have to get some more guys.
Um,
If you're listening, put
yeah,
double that staff. We need you. Open up San Francisco. The mint's just sitting there. Okay.
right. And as we've already mentioned, ETP holdings have hit a record high over 1 billion ounces,
Wow,
1.062 billion ounces
that's a
in
big number.
global ETPs.
Yeah.
There is some bad news though, and that it's on the um, more on the industrial side. But I think
Okay.
it's going to come back as we've kind of talked about already.
All right.
Industrial fabrication demand is forecasted
Ah,
to drop by 9%.
that's a big number.
Um, 466.5 million ounces is a 5-year low.
Yeah.
That's reflecting impacts from lockdowns and supply chain disruption.
Okay. Yeah.
Um,
Supply chain disruption is the key here.
Photovoltaic demand
Okay.
expected to fall by 11% to 88 million ounces
That's interesting.
this year. But again, I'm optimistic
Yeah.
for 2021 and
I don't
moving
know.
forward.
I think we got to take that with a grain of salt as well.
Automotive sector demand expected to drop by 17%. And then global silver jewelry and
Yeah.
silverware demand expected to fall by 23% and 34%
So a lot of
respectively.
negative stuff on the industrial numbers from a reliable source.
Yeah. So it's
Yeah.
it's kind of a mixed bag. But I'll tell
Yeah.
you, if things flipped, if we go into recovery,
Mm-hmm.
investment demand drops, and that industrial demand and
Picks up.
auto sector demand and
Right.
jewelry and silverware
Photovoltaic.
demand picks up,
Right.
I think that that's probably a pretty favorable offset. And again, I go back to my statement that I think silver is holding up remarkably well,
I agree.
given
And
the
and
given the
and look at, if
conditions.
we do get the flip and silver manages to hold $25. I mean, that's quite a statement from where we were a year ago, right?
Yeah,
Yeah.
yeah. I think we could see $30 in silver again in perhaps as early as the first quarter of 2021.
Okay. I'm gonna
And
hold
and
you to that.
it would be premised on a rebound of all the things that are showing declines this year because of
Okay.
COVID and supply chain disruption stuff.
All right.
So sorry to backtrack and go all the way
No,
back
no.
to silver, but
Look at, we got to look at. We're here to present the truth,
yeah,
and it's important to get those numbers in, and especially from a good source. And they're dismal by comparison to what we were hoping for. But like you said, if we get a flip, that thing. And one thing about silver, it can turn on a dime.
that is a fact. That is a
Yes,
fact.
sir.
So just real quick, we have a shortened holiday week this week because of
That's right.
Thanksgiving here in the U.S.
Are we
Um,
going to do a show because we've got everybody's gone, the market's not
let's
trading?
take the
No.
week off, my friend. I'm going up to the mountains to social distance and be.
Well, gee, I don't know. Maybe I'll hang around here, huh?
You're at the beach already, my friend. The two numbers that we will be watching this week: consumer confidence, market expectations has dropped to 99 from 100.9, so a point drop. Um, it might be more than that, given the
Yeah.
resurgence of COVID. And
Okay.
we also have durable goods out this week.
Ah,
Market expectations plus 0.9
that's 0.9.
versus 1.9% plus 1.9% last week. So
Okay.
we'll be watching those numbers.
Yeah.
And, even though we might not shoot a video next week, you can always catch us on Twitter and on LinkedIn
Are you going to
and
do our
Facebook.
midweek
I
the
will still
special
get
report?
out the Grant on Gold newsletter. Yes.
Outstanding. All right. Make sure you guys, if you want to know where you're
I
at in the
might
middle of
actually
the
do it
week,
early. I might do it on Tuesday this week.
it's not a bad idea. Well, if we get action, if there's something to report, we report it, right?
Exactly.
Okay.
Exactly. With
All right.
that, I think that does it for this week in metals. I'm
Absolutely.
Peter Grant with Zaner Metals in Denver.
Pete Thomas, hey, thanks as always. Don't forget, give us a like, give us a follow. We need them. Our numbers are going up. It gives us an opportunity to do a lot more things for you guys. Thanks again.